Hello, this is Matt on the Moon Lambeau channel. Despite the tremendous market pullback that we had about a week ago, every indication at this point is that markets are healthy and resilient. And so if you're one of those people out there, and I think there are many, and it's okay if you are, concerned about whether or not XRP is actually going to go on its tremendous bull run like we've all been hoping for up to this point, I think the answer personally is yes. I think that it's an inevitability, I personally believe. And to be clear, look, I don't have a financial background of any kind. I'm not offering financial advice, so don't buy or sell anything because of anything I say or read. I'm just happy to share my everyday Joe Schmo opinion here. But look, there's all sorts of indications. For instance, take a look at this headline. These types of stories are increasing. Despite what has happened in the crash over the last week, the world keeps on turning. Here you go. Ripple joins top crypto exchanges in shifting 238 million XRP. And then there was this article, which I do want to run through from Bloomberg. JP Morgan compares the recent crypto plunge to 2017, and it's not so bad as you might think. I've also got a thread on Twitter from Raoul Pal, who is a former Goldman Sachs executive who's very into crypto. And so, look, if you've had the concern, my gosh, the market has crashed, is it the case that perhaps we're going to now have this massive 80% bubble poppage like we saw last market cycle? Well, I still think we're going to have a bubble fully inflate and then pop, and then things will crash 70, 80, 90+%. I am anticipating that. I just don't think we're there yet, for a ton of reasons, which I've been articulating on this channel, but I want to share with you some perspective from people that have finance backgrounds here, because you're talking about JP Morgan and Raoul Pal specifically. Actually, let's just go ahead and dig into this piece here. This is the one from Bloomberg. It begins as follows. I wrote on Sunday that the violent action in crypto bore some resemblance to the market peak in December 2017 and January 2018. I'll pause right there. Just to be clear, since there are many people new to crypto, that is exactly when when the crypto markets hit it. The crypto markets, just the world over, hit peak. Bitcoin hit its top towards the end of December 2017. Many other cryptocurrencies, though, they had their highs after. For instance, it wasn't until January 4th, 2018 that XRP hit its all-time high of $3.92, and that, depending on where you go, you'll get different numbers because these entities, they pull data differently. But Live CoinWatch, for example, they pull the data the way they pull it, and it results in the all-time high displaying is $3.92. But anyway, the piece continues. Since then, we've seen a bit of a rebound, although the big coins are still well off their recent highs. In a fresh note out last night, JP Morgan Chase's head of interest rate derivatives strategy, Josh Younger, who's been writing a lot about crypto lately, published a note getting at the same idea that this market bears a resemblance to that peak. So some of it does, as you'll see it as I go through this, and this caused so many people to flip out. And also, by the way, I'm going to cover this story too. I meant to mention this right in the intro, but take a look at this. 1 in 4 college students have invested in crypto, and it's harming their health. Oh, no, with those snowflakes. So we'll get to that too. That's interesting. But back to the Bloomberg piece. Here are 2 charts showing that nicely. The second one, the seemingly parabolic rise of the non-blue chip cryptos, is particularly powerful in that it offers a very clear indication of the animal spirit cycle. As the boom goes on, traders make bets on riskier and riskier stuff. And so the chart's on their screen if you care to look at it. But yeah, so as far as traders making riskier and riskier bets on riskier stuff, you know what's really being described here, right? It's just the natural market cycle, that the way that money flows through the crypto system, the ecosystem, just like it always has. It hasn't changed to this point. I do think eventually human behavior is going to change as markets mature. But to this point, money starts at the top. In this case, it means Bitcoin. And then once that runs up enough, there are people that have invested. They're like, whoa, this is worth so much relative to what, in terms of, think about it. If you invest in if you invested in Bitcoin last year during the C19 scare when it was about $3,000, and you held it all the way up until it hit $65,000 about a year later, my gosh, depending on how much you bought, think about what that would do in terms of what percentage of your net worth is in that, and is it a reasonable percentage? Might you want to adjust your risk exposure? And so people will diversify as a result. So even if they believe in Bitcoin, maybe they don't even sell all of it, but they'll take big chunks. And if they just want to invest in crypto, other cryptos, just for the opportunity to see them run up too, well, then they do, and that's how people behave. And so you can say it's riskier and riskier and stuff. And in a general sense, I think that's actually probably a fair assessment. In a general sense, the further you go down in terms of market cap, that's the perception, at least. Right or wrong, that's the perception. And so market cap, love it or hate it, it is used as this position, like these cryptocurrencies. It's just a jockeying for position. And there are a handful of people out there, like myself, and maybe you're one of them, who will make purchasing decisions based on utility. And so that's what I did initially, certainly in the case of XRP. And I think enough people have done that, resulting in it being in the top 10 cryptocurrencies for the entirety of its lifespan. And it's bounced around a bit for various reasons, but there is a reason now that there's still over 8,000 cryptocurrencies, and it's still been up there. Well, why is that? Well, most people don't sufficiently parse out the differences between coins, but enough do that it's up there and it's got attention. And so now that it's on so many more exchanges, now at this point, even if you don't know a damn thing about utilities, it's traded on so many exchanges. If you're just an uneducated person, you'll come in and buy XRP and everything, and you're not researching a damn bit of it. Or you just look at very service level stuff and couldn't really articulate any sort of rationales why it makes sense to hold any of them. I think a ton of people do that. And so you do see that money will go in, start at Bitcoin, and then it'll flow into other coins, large cap coins, then mid cap, and then small cap, and it just gets riskier and riskier and riskier. And that is what happens functionally. Anyway, the piece continues. However, Younger notes differences as well. For one thing, the market volatility seems primarily to be a North America phenomenon this time around, with prices much more stable in Europe and Asia. He also notes that while market depth has fallen in the recent liquidations, the markets remain healthy overall. Now that was fascinating, and you'll see as soon as I get to what Raoul Pal had to say about this stuff, I think you're going to find it very interesting, because he was effectively saying the same stuff. It's basically just a bunch of people that were highly leveraged and were irresponsible that just got liquidated. And no offense to you if you're one of the people using leverage. Everybody gets to make their own adult decision. I haven't ever done that. I'm never going to. I think people get wrecked that way. So there's data to indicate this as well. So I'm just not interested. But anyway, his conclusion. Here's the quote. We continue to see evidence of resilient microstructure in cryptocurrency markets. The volatility spike appears somewhat regionally localized. Market depth is down, but has not cratered despite these moves. And derivatives pricing has managed to adjust quickly enough to retain a decent fraction of the levered long base. This all argues against the view that we are in the midst self-reinforcing vicious cycle of price declines, a classic run scenario. And so again, there's another individual with a background here in this type of stuff who says, despite the sell-off, it looks like everything's more or less fine. Like that's how I'm interpreting it anyway. And that's why I keep covering this stuff on this channel. There's just so many indications that it just doesn't seem like that's going to happen. So will XRP get its day in the sun? I think the answer personally is yes, and that's the risk that I'm taking by having purchased XRP and continuing to hold it. That is my bet, that it is going to hit its all-time high, I think, at some point this market cycle, and then run into a whole new realm of price discovery. Will not be surprised at least to see at least $10 plus XRP. In fact, at this point, I'd kind of be surprised if we didn't see it. And one of the primary reasons, though, I say that is it's because the market moves in tandem. And so in looking at how high Bitcoin's gone and looking at how high Ethereum has gone, I'm just sitting there thinking, well, even if XRP just gets up to some of those types of levels, closer to that, my gosh, especially in particular, if Bitcoin's going to run much higher. Yeah, you're telling me, because if the rest of the market's going to run, I mean, then you'd be talking about, if you don't think XRP is going to hit that, then you'd have to believe that XRP is going to drop out of the top 10 cryptocurrencies by market cap for the first time in the history of XRP. And it's not that it's impossible for it to dip below for any number of scary reasons, whatever. But I don't think that's going to happen. And it's certainly not this market cycle, at least. There's certainly no indication that the market does move in tandem. And so you'd have to believe that the rest of the market, if you do believe it's going to go up, what, XRP's not going to be part of that? So I just don't think so. Anyway, they're right here also. This is really the key question right here. As many people have pointed out, the crypto market is highly reflexive. Historically, when prices go up, they go up fast because everyone wants in. And when prices then go down, they go down fast and stay down because people don't want to hold the stuff or buy the stuff if the line isn't going up. It seems plausible that, with greater institutional ownership and perhaps a greater number of true believers, this bout of selling won't beget selling the same way it did in the past. Plus, we've seen crypto continue to not die, despite a million obituaries having been written. So I agree with most of that, except for this part where this time's different, which is effectively what they were saying. I don't think this time is different. I think we just haven't gotten to the part that you're saying isn't happening in this piece. Oh, it's coming. It's definitely coming. We are not there yet. Humans have not finished tapping out this market, and until you see basically every cryptocurrency under the sun run up in a crazy way, yeah, we're not there yet. So for me, I still firmly believe it's coming for XRP. So here's now Raoul Pal, former Goldman Sachs exec. He's also the founder of Real Vision, which is a fantastic outlet for all things crypto. And he wrote the following. Something to get your head around. Headline, a major asset class crashed 42% in 14 days, wiping out $1 trillion in value in an orgy of liquidation of people up to 100x levered with very low regulation. Many tokens fell up to 70%, including unregulated lending and borrowing biz. Beneath the headline, though, crypto had a major VAR shock test and nothing happened. Leverage liquidation was offset by over-collateralization. No one was left holding the baby. No firm went under. The Fed didn't need to step in. DeFi didn't break and carried on near normal. There were no daisy chains of collateral losses. There was no collateral pressure. Stable coins remained stable. A few exchanges went down for an hour or two. No exchange big losses occurred. No need to mutualize losses either. No protocol failed. No firms needed rapid funding. No one had open-ended losses. The system didn't break. It offered zero systemic risk to the broader financial world. Speculators lost money, and that is it. This is what I first saw in crypto back in 2012. A new anti-fragile financial system that doesn't break in times of stress, where ownership of assets is clear and losses are not mutualized to taxpayers. This was a big 2 weeks for crypto and for the future financial system. And so I just thought it was a fantastic take on what has happened here. And looking into it to the extent that I have over the past week, the people that I respect the most, that I think are the most insightful and analytical, this is in line with the messaging that I tend to keep seeing over and over and over again. And I do believe that Raoul Pal in particular, I think he's intellectually honest. So you could say that any human's got a bias in anything in life, and he holds a ton of Bitcoin, and I understand that too. But I do get the sense, having followed him for some time now, that if he thinks something negative, he hasn't ever seemed to me to be afraid to say it. So this seems very genuine here. Now, how about this? 1 in 4 college students have invested in crypto, and it's harming their health. Oh, there's poor little snowflakes. Life is hard. A survey by information provider Alba Heaven has revealed that 1 out of 4 college students have cryptocurrency investments amid the growing adoption of cryptocurrencies among retail and institutional investors. The survey, which covered 1,750 college students, showed that 23.6% of these students invested in crypto. And so it's fascinating. I don't want to read the whole thing. I do want to get the part where they're emotionally disturbed. It's just like a crash course in adulthood then, because I assume that most of these college students presumably not too far out of high school. Of course, many people do go to college later in life, which is awesome, but I'm assuming that most much younger here. And so you know what most of them did though. They put in somewhere in the neighborhood of, I think, yeah, here you go. I think the average, on average, the students have invested a total of, on average, $1,250. So, which I think is, I mean, it's not like that's nothing no matter who you are, but still, like in particular, if you're a college student, that's a ton of money, right? And so I can understand that if you're putting in that and you're in college, you're a college student, and maybe you're working your way through college, I can definitely see how doing so, when you have extreme volatility in crypto, how that's going to cause some some stressful days and nights. I got that, but like, welcome to being an adult. Like, you got to understand, when you're investing in this asset class, it's extremely volatile, and you should only put in money that you're willing to lose, no matter what you're investing. That's true not just of crypto. It really pretty well in anything. There's always going to be a risk, even in asset class that are historically perceived at least as less risky, like real estate. What happened in 2008 and 2009? What happens even if there's healthy real estate markets the world over? What if you pick a bad neighborhood? Like, things can happen. Or what if you pick a good neighborhood, was what I mean more specifically, and then it goes downhill. So there's going to be risk associated with anything in life here. But take a look at what they wrote here. Here's the headline: Bitcoin harming the student's health. As a result of the unexpected losses from the cryptocurrency investment, most young investors suffered from various psychological issues. According to the survey, 68.3% of these students had experienced mental distress as a direct result of crypto investment. 1/3 of the survey participants said they experienced unstable emotions depending on the price of the crypto they had invested in. They also complained that they could not concentrate on their daily tasks, work, and study. Additionally, the young investors said they could not continue with usual daily routines, and some even developed insomnia. So, I feel like all of them probably need to talk to me, because they don't understand the big picture of what it's like to hold. Because, like, yes, things are more volatile in crypto than the stock market, but humans have the same emotional response, just on a different timeline, because things move slower in the stock market typically. But like, it's the same human emotions, and like, you gotta put the money that you earn somewhere, don't you? And keeping it in cash is a terrible idea, isn't it? Because it's like a melting ice cube, thanks to governments the world over. If you're talking about the United States dollar, for example, just the dollar endlessly being debased by crazy trillions of dollars of constant printing, it's just losing value. And so you've got to take what you earn and put it somewhere, but you got to understand there's always going to be volatility. And so in the case of crypto, it's been in an upward climb for 12 years with no sign of it stopping, even though, and I'll acknowledge, like, I do believe that you're going to see a massive slump at some point, whether it's 70, 80, 90+%. Historically, that happens every so many years, and I do think that's going to happen again. But even then, the people that buy at the height of that, if they just have a sufficiently long outlook, data would indicate that there's certainly a chance, it's likely, because it's happened every time in the past, that even if you were unlikely and purchased at the top, give it X number of years, and you're going to hit that all-time high again and then blast past it. Just like if you bought Bitcoin at the height of its market cycle last time in late 2017 at $20,000, well, guess what? If you held it a few years, if you were that unlucky that you purchased, then fine, just hold it a few years, and then it ran up to $65,000. Well, how about that? And so we keep seeing that, and clearly the crypto asset class isn't going away. So I just think people don't have sufficiently long time horizons. I think people are putting in more in many cases than they're actually comfortable with, and I don't know how you're going to feel comfortable with anything. I mean, my gosh. I mean, if it gets to the point, can you imagine? I'm okay. So, like, I have an abnormally high percentage of my net worth in crypto now, but that's because it became that, and I don't think the market cycle's done, so I'm not flipping out. Like, I sleep easy every night, but my gosh, if I were to just take that percentage of what my net worth is and then put it in now, like, say I had never held crypto, but then I put that made that percentage of my net worth in crypto, I'd be losing my ever-loving mind. I wouldn't be able to sleep at night. You gotta only put what you're willing to risk. And so I'm doing that for myself. I feel fantastic. I would feel I would have a hard time sleeping if I didn't have this risk exposure. But I don't know. I have enough experience with it, and I understand the human psychology behind it. Like it just doesn't bother me at all. I'm just emotionally bulletproof when this negative stuff happens here. I think it's just so many people just don't know what the hell they're getting into. There's a reason that I've been talking about it so much. Like a couple of reasons. First of all, I know there's so many new people jumping into crypto and subscribing to my channel, and I know what just happened within the last week. And so for so many people, that's the first time they've experienced any of this. And I'm just like, like I did not feel scared or this or that. I didn't panic sell anything. That was fine. And I think that's the right way to feel. Now, at some point, I'm going to start to get a little bit nervous when I think we're actually hitting the top of this market cycle. And not horrendously nervous. I'm just be like, okay, I want to get the most profit I can out of this, and so I want to sell on the way up. But even if I missed that, even if I completely botched it, and I didn't sell at all, and then things just quickly dropped to 80%, and I didn't have a chance to sell, and then so we're truly in a bear market again, you know what I'd do? I'd just hold for another few years. I'm like, okay. Life goes on. Life goes on. Now, I don't think that's what's happening here. I'm just saying, even if. And so people, they're just, if you don't look at it with a sufficiently long time frame, yeah, you're going to have a bad time, and you're going to just emotionally wreck yourself. But you don't have to, it doesn't have to be like that. So there we are. But look, all that to say, I firmly believe that XRP is going to be rocketing. I don't pretend to know for sure when. That's why it's so interesting to see what so many chart analysts think about that. Vast majority of them do think it's just a matter of months, perhaps less than that, before you start to see XRP really rally up. And my gosh, can you imagine all-time high again sometime? Even if whether it's 1, 2, 3, 6 months, whatever. Can you imagine? Like, I don't know if that sounds like a long time to you if you're new, but I've been here 3.5 years, and most of that time, my investments in XRP have been down or at about parity, about break even. So, waiting another 1, 2, 3, 4, 5, 6 months, I'm like, is that even real? Because, like, I mean, I believe it could be, maybe. That doesn't sound bad to me at all. So, all right, I'll go ahead and wrap up there. But let me know what you think about all of this in the comments section below. I always love hearing from everybody. But I'm not a financial advisor. Do not buy or sell anything because of anything that I say or write. That would be a very, very, very bad idea. Until next time, to the moon, Nambo.